Welcome to the weekly market wrap-up. Here's what happened in the markets this week. This week shattered any hope in the near term of returning to a stable market, as investors simply could not decide whether optimism or pessimism should rule. The wild ride this week all but settles it. Investors are in dire need of some quality time with a therapist. What's the diagnosis? Let's find out. The Dow Jones perfectly captured investor madness this week. On Tuesday, the big board plummeted 272 points, only to recover on Wednesday, gaining 274 points. And then on Thursday, the Dow crashed again, dumping almost 335 points, shedding almost 2% in overall value to close at 16,659. And the S&P 500 also displayed similar symptoms as it stumbled 29 points on Tuesday, only to leap 33 points Wednesday and then crash again Thursday, losing 40 points or 2% in value to close at 1,928. And the Nasdaq was also caught in the frenzy. On Tuesday, it dumped 69 points, only to shoot up 83.39 points on Wednesday, and then plummeted 90 points on Thursday, also losing 2% in overall value to close at 4,378. Now let's turn to Canadian markets, which were afflicted by the same investor indecision as the markets to the south. The Toronto Stock Exchange plummeted 166 points on Tuesday, only to rally Wednesday, gaining 90 points. However, Thursday was again bleak, crashing 205 points or 1.4% in value to close at 14,460. The TSX Venture Exchange was the only market with a stable trajectory this week, and that was down. On Tuesday, it dropped 13.15 points. On Wednesday, it dipped 6.16 points. And finally, on Thursday, it dropped another 1.85 points to close at 836. So what's the cause behind this week's market woes? It's really a continuation of a series of events which have led to investor indecision and schizophrenic behavior. Geopolitical instability in Ukraine and the Middle East continue to affect the market, albeit sometimes this feels more like an excuse rather than a real trigger of the market. As well, concern over the global economy is having an impact on investor sentiment as growth in China slows and data from Europe continues to disappoint. Finally, investors can't seem to make up their minds in regards to the threat of interest rate hikes. It seems no matter what the Fed says to ease concern, investors continue to react in wild swings. On Wednesday, the Fed released the latest FOMC minutes, which show that the Fed will wait longer than expected to raise its benchmark interest rate, which is currently pegged at 0% to 0.25%. This is no change from what the Fed has been indicating for the past 2 months, and the news is what propelled the markets to rally on Wednesday. Yet on Thursday, investors seemed to second-guess the news and return to a sell-off. With such indecision taking hold of investor sentiment, we could be in for a wild ride throughout the rest of the year. Hopefully, over the coming holiday season, investors will make some room to spend some quality time in therapy. Now to winners and losers in our picks for the week. The winner for this week is Digital River, ticker symbol DRIV. A cacophony of good news over the past few weeks paid off Wednesday as Digital River shares jumped 11% to close at $16.53. The spike comes after the announcement of a slew of online payment agreements and the inclusion of the new Apple Pay system in its worldwide mobile point-of-sale platform. Digital River provides clients a global cloud-based e-commerce payments and marketing platform that allows companies to quickly and cost-effectively establish an online sales channel. The loser for this week is JCPenney, ticker symbol JCP. Shares of the beleaguered department store operator fell almost 11% on Wednesday after it warned its September sales were weaker than expected and then cut its outlook for the current quarter. The warning overshadowed the unveiling of a new turnaround strategy, which JCP says will boost sales by $2.55 billion over the next 3 years by improving performance in key categories such as beauty, jewelry, and accessories. Well, those are our winners and losers for this week, and now it's time to check in on the gains that you could have locked in by following the weekly watch list from Robert James and Viral Stocks. That's enough about this week. Now let's turn to BayStreet.ca's look at the week ahead and the snapshot of what analysts are forecasting for companies whose earnings reports are coming out next week. Canadian markets are closed on Monday for Thanksgiving, and with a light week ahead, we focus on U.S. stocks to watch. First up on Tuesday is Intel Corp with an EPS forecast of 65 cents compared to 58 cents in the prior year quarter. Next up on Wednesday is Netflix Inc. with an EPS forecast of 91 cents compared to 52 cents in the prior year quarter. In late September, Netflix and Rainbow Studios announced a spin-off of their popular Winx Club as a new original TV series for kids. On Thursday, Advanced Micro Devices Inc. is out with an EPS forecast of 4 cents, identical to the prior year quarter. And finally, on Friday is Morgan Stanley with an EPS forecast of 55 cents compared to 50 cents in the prior year quarter. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. Before you head out for the weekend, make sure to subscribe to our YouTube channel or podcast on iTunes and find us on Facebook and on Twitter. For Viral Network News and BayStreet.ca, I'm Hannah Bernard. Thanks for watching.